Welcome, everyone. Today, I am going to teach you about the on-balance volume indicator, or OBV for short. By the time we are done, you will know what OBV is, how it works, and how you can use it to improve your trading. You will be able to confirm trends, spot possible reversals, and make better decisions when it comes to buying and selling. So stick around because we are going to cover everything you need to know, step by step. Before we dive in, let me ask you something. What if you could see buying and selling pressure before it caused a price movement? Imagine being able to anticipate where the market is headed, just by looking at volume. All right, so let us begin with the basics. You might be wondering, what exactly is on-balance volume? It is actually pretty simple. OBV is a tool that uses volume to help predict changes in the stock price. It works by keeping a running total of the volume traded. If the price of a stock goes up, the volume of that day is added to the OBV. If the price goes down, the volume of that day is subtracted from the OBV. Over time, this total helps us see where the buying and selling pressure is. Now, let us take your trading skills to the next level by exploring how OBV can be paired with chart patterns to further refine our analysis. Imagine being able to combine volume insights with price formations for even stronger signals. This combination could provide just the edge you need in your trading strategy. There are many common chart patterns that can be identified in the price action, and using OBV alongside these patterns can provide extra confirmation. For instance, take a classic chart pattern like the head and shoulders. This pattern often signals a reversal, and OBV can help confirm whether the selling pressure is indeed building during the formation of the right shoulder. If OBV is falling while the right shoulder is forming, it adds weight to the idea that the trend is about to reverse. Another example is the double top or double bottom pattern. These patterns represent attempts by the price to break a level and then failing. When a double top forms, if OBV starts to decline after the second peak, it signals that the buying pressure is fading and a reversal is likely. Similarly, for a double bottom, if OBV starts to rise after the second dip, it shows that buying pressure is increasing, supporting the idea of a reversal to the upside. Triangle patterns such as ascending, descending, or symmetrical triangles also work well with OBV. If you see an ascending triangle forming, you would expect to see OBV rising, which indicates that buying pressure is building and a breakout to the upside is likely. Conversely, in a descending triangle, a declining OBV would suggest that selling pressure is increasing, which means a breakdown could be on the horizon. Flag and pennant patterns are another useful tool when paired with OBV. These patterns typically occur during a strong trend, representing a brief pause before the trend continues. If a flag forms during an uptrend and OBV continues to rise, it suggests that buying pressure is still present and that the uptrend will likely resume. Using OBV in combination with these chart patterns can make your trading decisions more robust. It provides an extra layer of information, helping you to confirm whether the buying or selling pressure supports the pattern you are seeing on the chart. This kind of confirmation can be crucial, especially in volatile markets, to help you avoid false breakouts or breakdowns. So, as you learn to recognize these patterns, make sure to add OBV to your analysis. It will give you more confidence in your trades and help you better understand the dynamics of buying and selling pressure during the formation of these key chart patterns. Now, why should we care about OBV? This indicator matters because it tells us something important. Volume often changes before price does. Imagine you could tell that more people were buying a stock, before the price started to go up. You would have an edge, right? That is the power of OBV. It helps us catch changes before the price moves, giving us a chance to make smarter trading decisions. Let us talk about how OBV is calculated. Do not worry, it is not too complicated. If today's closing price is higher than yesterday's, we add today's volume to the OBV. If the closing price is lower, we subtract today's volume from OBV. It is as simple as that. The number keeps building over time, reflecting all the buying and selling happening in the market. Pretty cool, right? Now let us dive deeper into how we can use OBV with chart patterns. Chart patterns are formations that traders often use to predict future price movements. There are many different chart patterns that occur regularly, and each can provide unique insights when used in conjunction with OBV. One popular pattern is the head and shoulders. This pattern usually signals a reversal in the market trend. When you see a head and shoulders forming, you want to check the OBV to see if it confirms what the price is telling you. During the formation of the right shoulder, if OBV is falling, it is an indication that selling pressure is building. This adds more confidence to the idea that the trend will soon reverse. Another common chart pattern is the double top and double bottom. These patterns occur when the price tries to break a level twice but fails each time. If a double top forms, the price reaches a peak, pulls back, and then attempts to break the peak again. If OBV starts to decline after this second peak, it tells us that buying pressure is weakening and a reversal to the downside is becoming more likely. The double bottom works similarly, but in reverse. If OBV rises after the second dip, it shows buying pressure is gaining strength, which makes an upward reversal likely. Let me ask you this. Have you ever wondered how to add more certainty when trading triangle patterns? Triangle patterns, including ascending triangles, descending triangles, and symmetrical triangles, are also useful with OBV. In an ascending triangle, you expect the price to break to the upside. If OBV is also trending higher, this provides confirmation that buying pressure is accumulating. In a descending triangle, you typically expect a downside breakout. If OBV is declining, it shows that selling pressure is building, which can confirm a likely breakdown. For symmetrical triangles, which can break in either direction, watching OBV can give you a clue. If OBV is rising, the breakout is more likely to be upwards, while a declining OBV suggests a downward breakout. Another key pattern is the flag or pennant. Flags and pennants often occur after a sharp move in price, representing a short period of consolidation before the trend resumes. If a flag forms during an uptrend and OBV continues to rise, it is a strong sign that the uptrend will continue. Conversely, if the flag forms during a downtrend and OBV is falling, it indicates that sellers are still dominant and the trend is likely to continue downwards. Wedge patterns, such as rising wedges and falling wedges, also provide valuable insight when paired with OBV. A rising wedge is generally a bearish pattern that shows slowing upward momentum. If OBV is declining during the formation of a rising wedge, it confirms that buying pressure is fading and a breakdown is likely. For a falling wedge, which is a bullish pattern, if OBV is rising, it suggests that buying pressure is building, which can lead to a breakout to the upside. Let us not forget about the cup and handle pattern. This pattern is often a bullish continuation pattern. The cup part forms as the price dips and recovers to the previous high, and the handle forms as the price consolidates briefly before breaking out. When OBV is rising during the formation of the handle, it suggests that accumulation is happening and an upward breakout is more likely. Using OBV together with these chart patterns adds another layer of confirmation to your trading strategy. It is one thing to see a pattern on the price chart, but when you also have volume represented by OBV agreeing with that pattern, it gives you more confidence in your decision. Whether it is a reversal pattern like a head and shoulders or a continuation pattern like a flag, OBV can help you determine whether the buying or selling pressure supports the move you expect. These chart patterns are tools that, combined with OBV, make it easier to understand what the market is doing. They help you recognize opportunities and avoid getting caught in false moves. Take your time to study these patterns, watch how OBV behaves alongside them, and use that knowledge to make more informed trading decisions. But the real magic is in how we read the OBV indicator. Let me break it down for you. If OBV is rising, it means that more people are buying than selling. That is a good sign if you are in an uptrend because it confirms that buyers are in control. If OBV is falling, it means that there is more selling pressure, which could confirm a downtrend. It tells us that sellers are taking over. But what if OBV is just moving sideways? What does that mean? Well, if OBV is flat while the price is trending, it can be a signal that the trend is losing its momentum. In other words, the price might be getting ready to reverse. It is something to keep an eye on, especially if you are seeing other signs that a trend is weakening. One of the main reasons traders use OBV is to confirm the price trend. Let me give you an example. If the price of a stock is rising and the OBV is also increasing, that is a strong signal that the uptrend is solid. Buyers are driving the price up, and we can see that clearly in the OBV. The same goes for a downtrend. If both price and OBV are falling, it confirms that sellers are in control. Now, let us expand on how OBV works with different chart patterns to enhance your ability to confirm trends and anticipate market moves. For instance, with a rising wedge, which typically suggests a bearish reversal, you will want to see if OBV is falling as the price moves upward within the wedge. If OBV declines while the rising wedge forms, it signals that buying interest is weakening and a bearish breakdown might be imminent. In contrast, with a falling wedge, which often indicates a bullish reversal, you would expect OBV to rise as the price continues to move lower within the wedge, suggesting increasing buying pressure and a potential breakout to the upside. Let us also consider the rectangle pattern, where the price is essentially moving sideways within a range. If OBV is trending higher while the price is consolidating within a rectangle, it is a clue that accumulation is happening, and an eventual breakout to the upside may be on the horizon. Conversely, if OBV is trending lower, it suggests distribution and a possible breakdown to the downside. Another important pattern to understand is the broadening formation, which can indicate increasing market volatility. In this case, if the price is making higher highs and lower lows, but OBV is falling, it suggests that despite the price swings, there is a lack of strong buying interest, which could lead to a bearish outcome. On the other hand, if OBV is rising during the formation, it might indicate growing buying pressure that could result in a bullish breakout. The symmetrical triangle is another significant pattern where OBV can play a crucial role. Since a symmetrical triangle can break out in either direction, looking at OBV can help you gauge the most likely outcome. If OBV is increasing, it points towards an upward breakout, whereas if OBV is decreasing, a downward breakout is more probable. Let us also talk about channels. Price channels, whether ascending or descending, represent a trending market within a parallel boundary. If the price is moving within an ascending channel and OBV is rising, it suggests that the uptrend is strong and likely to continue. However, if OBV starts to decline while the price remains within the channel, it could indicate that the trend is losing strength and a reversal might be near. The same logic applies to descending channels. If OBV declines along with the price, it confirms the strength of the downtrend. By analyzing OBV in tandem with these various chart patterns, you can better determine whether the observed price movements are supported by genuine buying or selling pressure. This deeper understanding can help you make more informed trading decisions and identify high probability setups, reducing the risk of getting caught in false breakouts or breakdowns. Now, let us talk about one of the most powerful aspects of OBV, which is spotting divergences. This is where OBV can give you a big heads up. If OBV is rising but the price is not moving up yet, it could mean that buying pressure is building up. A breakout might be just around the corner. On the other hand, if the price is climbing but OBV is falling, it might be a sign that the trend is losing strength. This kind of warning can help you avoid getting caught in a reversal. OBV is also really helpful for spotting possible reversals. If OBV and the price trend start to diverge, it might be time to pay close attention. For example, if the price is making new highs but OBV is not, that could mean that buying interest is fading. It might be time to get ready for a change in direction. This can help you get out of a trade before things turn against you. Another cool thing about OBV is that it can act as a form of support and resistance. Let me explain. If OBV has reversed direction at certain levels in the past, it is worth watching to see if it does so again. These levels can give us clues about where the price might find support or face resistance. It is just another way OBV can add value to your analysis. Now, OBV works even better when you combine it with other indicators. One way to do this is to use OBV with a moving average. Imagine the OBV is rising and the price crosses above a moving average. That is a strong sign that the trend might continue. It is like having two sources of confirmation, making your decision more reliable. You can also use OBV with the Relative Strength Index, which is called RSI. RSI is a momentum indicator, and when you use it with OBV, it can help you confirm whether a stock is overbought or oversold. For instance, if RSI shows that a stock is overbought and OBV is starting to fall, it could mean that a reversal is coming soon. This combination can be particularly effective in spotting turning points in the market. If RSI indicates that a stock is oversold while OBV is rising, it could be an early sign that buying pressure is returning and a reversal to the upside is near. By using both indicators together, you can reduce false signals and make more informed decisions, especially during periods of high volatility. It helps you see the bigger picture and make decisions with greater confidence. Let us look at some practical examples of how you can use OBV in your trading. Picture this: the price of a stock is moving sideways, stuck in a range, but OBV is steadily rising. What does that tell you? Even though the price is flat, buying pressure is building up. This could be a sign that a breakout is likely to happen. It is like a spring that is coiling up, getting ready to pop. Now imagine the opposite. The price is in an uptrend, but OBV starts to decline. That is a divergence, and it could be a warning that the trend is losing steam. It might mean that sellers are stepping in, and the price could reverse. These are the kinds of signals you want to be on the lookout for. They can make a big difference in your trading results. But let us also talk about some common mistakes that traders make when using OBV. One mistake is ignoring the price action. OBV is a great tool, but you cannot rely on it alone. Always pay attention to what the price is doing. For example, if OBV is rising but the price is not, do not jump into a trade just because of OBV. You need price confirmation before making a move. Another mistake is misinterpreting divergences. Not every divergence means that a reversal is coming. Sometimes the price will keep moving in the same direction despite a divergence in OBV. This is why it is important to look for other signs before making a decision. Be cautious and do not rely on OBV divergences alone. OBV can also be adapted for different markets, and it works well across various asset classes with some adjustments. In the stock market, OBV is particularly effective for tracking big players like institutions. These large institutions often move substantial amounts of volume, and OBV can help pick up on this activity, giving traders an edge by identifying accumulation or distribution phases. In the forex market, where actual volume data is not readily available due to its decentralized nature, traders can use tick volume as a proxy. Tick volume represents the number of price changes, and while it is not the same as traditional volume, it often closely correlates with real trading activity. Using OBV with tick volume in forex can still provide valuable insights into the underlying buying and selling pressure. In the cryptocurrency markets, where volume data can vary significantly between exchanges, OBV can be applied to individual exchange data or aggregated volume across multiple platforms. This can help gauge overall interest and activity in a particular cryptocurrency. OBV in crypto is particularly useful for detecting large-scale buying or selling that might precede a significant price movement. For commodities and futures markets, OBV can also be a helpful tool. Since these markets often have significant participation from institutional investors and hedgers, OBV can help detect early signs of changes in buying or selling interest. By applying OBV in different markets and understanding the nuances of how volume data is represented, traders can better adapt their strategies to fit the characteristics of each market. So, to sum it all up, on-balance volume is a powerful yet simple tool for understanding buying and selling pressure in the market. It can help you confirm trends, spot potential reversals, and improve your timing. Start applying OBV to your charts. Look for trend confirmations and divergences. Practice using it and combine it with other indicators to see how it can enhance your trading strategy. Learning how to use OBV well takes practice, but it is worth it. It is a great addition to your trading toolkit and can help you make better decisions. Keep experimenting, keep learning, and do not hesitate to ask questions or share your experiences. The more you use it, the better you will get at spotting those key signals. Thanks for being here today, and I wish you happy and successful trading.